Hi, I'm Pattu from freefincal. In our monthly mutual fund screeners, we don't use small cap indices to benchmark small cap mutual funds. We in fact use Nifty mid cap 150 TRI, and I've also used Nifty Next 50 as a benchmark for both mid cap indices as well as small cap indices. So many people have asked me, why do you do this? They say that it's wrong because they say that small cap mutual funds should only be compared with small cap indices and so on. Well, not quite. See, the point is that small cap mutual funds are among the most expensive mutual funds in the market, and I think we have to compare them with a more sterner benchmark. That is a benchmark that is more difficult to beat than just the small cap index. So it's like you look at the Indian team and you look at them and they say that they won their last 10 or 15 matches, but what matters is who's the opposition and where were all those 10 matches played. So all those things matter into deciding who is the greatest team of all time or so on or something like that. So it matters. A victory is good, but what kind of victory is it? Was it a hard fought victory or was it a easy win? Is something that we have to take into account, especially in mutual funds, because of the kind of huge expense ratios that they charge even for the direct plans, the small cap funds. So the reason why I don't recommend using a small cap index for small cap mutual funds is because they're very easy to beat. For example, if you look at the 5-year rolling returns of the Nifty Next 50 in green, the Nifty Small Cap 250 in white, the Nifty Mid Cap 150 Quality 50 in pink, and the Nifty Mid Cap 150 in kind of brown, light brown. It's hard to see, but probably you should be able to make it out. You can see that these are like 4,251 data points in each colored line, and they represent every possible 5-year returns. That's 4,251 data points, 5-year return data points since the small cap index existed. And you can see that typically the small cap index has been the backbencher. It's been the bottommost performer over 5 years. Then some people say, oh, over long term it will work. No, the small cap index has not worked over 10 years. Over 10 years again it has been the backbencher. Of course, now we have only 3,000 data points. Over 15 years now we have only about 1,800 data points. Again it has been the backbencher. It has always been the last performer when you compare the Nifty Next 50, Nifty Mid Cap 150, and of course the Quality 50. Quality 50, the situation is a little different. We'll come to that. But the small cap index has always been it has got the return that's the lowest. So which means that if I have a small cap mutual fund, I say, and I have bet the small cap index, that doesn't mean that the small cap mutual fund has bet the Nifty Next 50 or the Nifty Mid Cap 150. That matters because the Nifty Next 50 and the Nifty Mid Cap 150 are available as index funds and at a much lower price. So when you are able to get a higher return at a much lower price, why do you want to take the risk of investing in an actively managed small cap index? And sometimes it will beat these indices, sometimes it will not beat these indices. So that is the reason why I say don't use a very easy to beat benchmark for benchmarking a very expensive mutual fund. You have to use a tough to beat benchmark, and if you use tough to beat benchmarks like Nifty Next 50 and Nifty Mid Cap 150 for small cap mutual funds, it turns out, and I have shown this in several videos and articles before, it turns out that very few of them perform. Only 3 or 4 of the funds in the small cap universe already, which is small, are able to beat Nifty Next 50 and Nifty Mid Cap 150 consistently. So that is the reason why I keep saying, first of all, don't invest in small cap mutual funds. You get a little bit small cap exposure if you are invested in an actively managed mid cap fund. That is enough for anybody's portfolio. If you use Nifty Next 50 and Nifty 50 and Nifty Next 50, you are enough. That's enough. That you have got your large cap and you have got your mid cap exposure. That's more than enough. You don't need small caps. If at all you want to invest in small cap mutual funds because you looked at some portal that says, oh, last year the returns were so high and so on, then at least don't do a blind SIP. And I've shown that also before in previous videos. Don't I'll probably link them in the description, because what goes up comes down very fast in small cap universe, and the returns are just lost due to time. So it's a waste of time investing in small cap mutual funds. But if you want to benchmark them, please use a tough benchmark. Don't use easy benchmarks like the small cap index. Bye bye.